So the most asked question I get is, would you buy in this market? So that's what we're going to dissect next. So don't go away. We'll be right back. I hate to say it this way, but there's no cookie cutter answer to, is buying a house now the right time? So let's go over it. It's all going to be personal preference. And I'm not kicking the can on this thing. It is truly personal preference. Let me say this analogy, and I tell this to a lot of people. When you buy a car, you can never, you bought your first car and you had it, it was probably a beater, and then you're like, I really like a nicer car, but that payment is twice as much as I used to pay in the past. So did you ever not buy a new car because of that? Okay, that's one analogy I always give people. The next one, and I have 3 children, so I know this, are you ever really ready for children? You and your wife might be working, so forth. Then it's like, can we do it with one income? Can we not do it with one income or whatever? You have children and you do it. Okay, so I'm not saying it's easy or not. So let's go over some ideas or some things at least think about before you're buying a house. But some of the information I want to just kind of, I'll say not really debunk, but let's go through a lot of the headline news that's out there. And it's even confusing to me. And I do this for a living. So let's first look at how many houses are out there. Okay, so the first thing you think about is, are house values going to plummet? Well, why would they plummet? A huge influx of foreclosures are going to cause the market to crash. Well, let's dissect that area. So the headlines today, or actually, I take that back, on October 14th was foreclosures are surging now that COVID mortgage bailouts ended. Okay, so is that going to really collapse the market like it used to? Diane Olick just did a great video on this. Pay attention to this video in detail, and then when we come back, I'm going to dissect even more and explain what I would do in this market.
Foreclosures soared last quarter as mortgage bailout programs ended, but don't let that 67% jump fool you. Things may not be as bad as they sound. Diana Olick is here to explain. Diana?
Kelly, that headline number is pretty big, of course, but let's put it into perspective. We normally see around 40,000 new foreclosure actions a month, but with the mortgage bailouts, we were seeing next to none, just 3,000 to 4,000. For 4,000. Forbearance programs, public and private, allowed borrowers for up to 18 months. They are now ending for the first wave of troubled borrowers. So in Q3, mortgage lenders started the foreclosure process on just over 25,000 properties, a 32% increase from the second quarter and up 67% from a year ago, according to Adam. The highest levels in California, Texas, Florida, New York, and Illinois. Now, the numbers are still well below normal, but the rise does serve as a warning that foreclosures are headed back to pre-pandemic levels. There are still 1.4 million borrowers in forbearance plans. That's according to Black Knight. Now, I spoke with Dave Stevens, former FHA commissioner under Obama during the subprime foreclosure crisis. He said, I think the forbearance cliff will be minimal. Unlike the Great Recession, where home prices dropped approximately 20% from peak to trough, this recession saw home values rise by roughly the same amount. And of course, that means most of those who are unable to get current on their loans could sell and even possibly net a profit, Kelly.
Interesting. And what's the impact been on landlords given how long this moratorium did last?
Well, for landlords, if they've been in trouble on their mortgage, they can get into these programs as well. But really, for them, it's getting that payment in from the renters so that they can pay the mortgage itself, and they can also pay some of the costs, the property upkeep, the taxes. So that's been rough for them. But as you know, that the eviction moratorium expired, so they're starting to see more income come in again.
Right. And again, just to differentiate the foreclosure moratorium on the one hand, the eviction moratorium on the other being more of a direct hit for landlords there. But even they say they've been, kind of trying to take things as they come. If they've made it through this point, the cash buffer has been a big help for a lot of people. What's been the impact, Diana, as we talked about, of all the people who have been buying homes investor-wise, taking them on the market? When we spoke the other day with Ivy Zellman's firm, one of their concerns is you could unleash a wave of supply back onto the market, right? If the market turns.
Yeah, and Kelly, I can't tell you how much pushback I've gotten from other analysts on that, saying there's no way that we're overbuilt and we're going to have too much supply given how much demand we have right now. For those landlords, for the investors in the market right now, they're still seeing high demand from renters. They're still seeing increase prices. So for them, they have no reason right now to sell. If you were to start to see more foreclosures, that is more inventory come on the market, I think you would just see it snatched up by those investors anyway. So it's really not going to hurt the overall housing market.
Yeah, maybe now would be sort of a better time for that to be absorbed. All right, Diana, thank you very much. Diana Ole.
So now you can see a lot of headlines are clickbait. You know, the housing crashes and all that. It gets huge clickbait. Guys, I'll pull the curtain back. I use it sometimes too to get more and more new subscribers, because if I just put mortgage rates today, I'm competing with 50,000 other places, so they're not going to click. So you kind of throw something out there that'll cause them to click. But then from there, I try to give you nothing but the facts. So right now, when you do see these headlines, you guys will know that it's kind of deceptive. I'll put it that way. So you see foreclosures are surging now, the COVID bailouts or whatever. Okay, foreclosures jumped 32% in the third quarter, and are up 67% from 2020 numbers. Okay, so again, when we look at it or dig into the data, there used to be 40,000 foreclosures a month in a normal market. Okay, during the pandemic, we were seeing 3,000 to 4,000 a month, 10% of where it normally was. So then when you see these, there's a huge uptick in foreclosures, the first thing you're going to say is, see, I knew the markets were going to crash. Okay, so look, September foreclosures actions were almost 70% lower than where they were pre-pandemic. The total foreclosures are 60% lower, right? But there's still 1.4 million borrowers still in forbearance because they entered late and they were given leeway to able to do or forbear 6 mortgage payments. So some are still out there in the tune of 1.4 million. Okay, they only represent 2.6% of all mortgages out there. So don't let the fear of foreclosures or the world basically crashing because of this really concern you, because all it's going to do is help supply and help you not have to overpay. Okay, so now there was a caption that I just found: who should buy in 21 and who should wait? Okay, some of this stuff is, again, these are things that get you clicking. All right, so you go down through and say, okay, the pros of buying are what? Well, rates are low. Well, yeah, rates are low, but I'm not a huge proponent of just because you have low rates means you need to buy a house. Let's say, for example, rates are at 0 and you know you're going to get transferred or you might get another job and have to move in 6 months. Would you buy a house? No. Okay, so that's that. Raising home values. Okay, a great way to add equity to your portfolio. Put it that way. Your home is not only a place to live, but it also is a source of equity. So let's go to just the Schiller Index, and this gives us home values from 1988 to current. You can see they just continually increase. So if you bought a house in 1988 all the way up to, let's say, 2006, or you continued to own, where would you be? Well, you'd be up a ton. This was about, what are we going to say, 64,000. Now it's almost 280. Okay, so you would have recouped a ton of equity. You know, a lot of fortunes are made in this country on real estate. Now, can you always make money in real estate? I see that, I see books and all that. You can't lose in real estate. Guys, I can tell you personally, you can lose in real estate. I had a ton of real estate back in 2006, 7, and 8. I sold it and lost over $1 million. I kid you not. So you can lose. So I'm not in this market just pushing real estate. I'm saying be careful in what you're doing. We're going to go through a list of things next to explain to you guys what you should do or should not do when you're looking to buy a house. So let's just go back to this chart and look at it. Where are numbers at? So unless you bought in 2006 and then had to sell in 2010 or 12, you kind of got hammered. But if you were able to hold that a couple more years, you came back to square one and now you're up. Okay, so I'm not making a pro or con. I'm just saying we're not going to see a huge debacle in the market like we did in 2008, 9, 10, because it was a whole different environment at that time. All right, so let's try to debunk that part of the equation. Here's something weird. There are plenty of mortgage options. Okay, hold that thought. Now you go to cons. Low inventory. Well, I'm going to explain to you how inventory is starting to increase. And I think Diane Olick just mentioned that as well. There might be people that are getting out of the forbearance program that are going to put their house on the market. You might see a lot of landlords get to the point where they're like, I just don't want to do this anymore, and put their homes on the market. Diane Olick also stated most people have equity in their home. So even if they sold it, they would most likely sell at a profit. Okay. But competition from cash buyers. Yeah, guys, there are cash buyers out there. It's not as huge as they're making it to be. A lot of time the cash buyers are investment groups and things like that, going into certain areas, buying up rental properties. Okay, so then the next thing is tougher mortgage standards. Well, let's scroll up here again and say there are plenty of mortgage options. Okay, so I'll say on this type thing, tougher mortgage standards. Standards today is kind of where they should be, have always been. Back at the crash, I've been in this market for the last 33 years. And in 2006, 5, 4, the programs were stupid. And I'll say stupid. You could get it was called a NINA, no income, no assets, with a 580 credit score at 100% financing. Today, you can't even get a mortgage. You might be able to qualify for an FHA mortgage with a 580 credit score with 3.5% down with PMI and all this other stuff. So it is a completely different market these days than it used to be. Okay. And then this is a big thing. Is it cheaper to buy a home or rent? Okay. So it's specific to certain areas. Like if you live downtown New York, you probably couldn't afford to buy a home, but how much is rents? Then if you get in an area such as, I'm originally from West Virginia, you can buy a house for, $100,000, $150,000, $200,000. There's houses up for $5, $6, $7, $1 million back there, but you can buy your standard home for $200,000, $250,000 in the area that I grew up. How much could you rent that house for? Those are areas that you got to think about. Okay. So those are things there. So let me get into now personally some of the things that I would want you to think about. This isn't really high tech, and I apologize about that. But putting this together, I'm thinking myself, what would I do? But let's break this down. Should you buy a house in 2021 or 2022? First off, do you have a ton of debt? If you have a ton of debt, you might want to hold off. I'll say continue to rent or live with mom and dad or whomever you can to get your debt load down, because it's like a child that I said before. There's more expenses that come with owning a house than you might even anticipate. You might say, well, okay, buy the house. I got enough for the down payment and I can afford the payments. But wonder if the roof starts leaking. Do you have enough in reserves maybe to fix that? I had a recent client who purchased a home and their furnace went out basically day 2. Well, that's $3,000 out of your pocket. Okay. So those are the things you got to look at. So I'm always a proponent, and I say this to my clients, cash is king, but don't put all your eggs in the basket when you're buying the house. Hold some money back behind. Okay. Hold some of that money. You might say, Dan, I have 10% down. God bless you. If you have that plus a little bit more, you might want to use it all. But don't go penniless to put all your money down on your property. Okay. So that's one of the things I always talk about as well. The next thing is, do you plan on changing a job or moving to do you have to move within the next couple of years? Some of us know. Some of us don't know. Okay. So if you get blindsided and you have to move, that's one thing. But if you're like, you know what, I'm here. I don't really like my job. I'm job seeking and all this stuff. It might seem common sense to you and me, but there are people out there that they're in FOMO mode. And I'll explain FOMO here in a second. Okay. Don't impulse buy. I always say to myself, my wife might disagree with this, but when in doubt, do without. So what I do is I try to think about the purchase that I'm going to make, especially if it's a fairly big purchase. If I bought it, is it going to appease me for a long duration of time? Or do I just have that itch that I need to scratch to do it? And then you have remorse after the fact saying, did I really need to do that? So I always propose, try to live with that for a week or two. When in doubt, live without. or at least think about it for a little time duration to say, don't wake up one day and say, I'm going to buy a house today, or I'm going to buy a car today, because you're going to get, probably in the long run, it's not going to work out for you. Right? So that's the next thing I would think about. Don't impulse buy. Okay, that's it. I wouldn't overpay for a house right now unless I knew I was going to be there forever. For example, I know I want to retire in Florida. That's why I bought a condo there. Okay, I don't plan on ever selling that unless I have to. So I didn't overpay, but would I overpay now for that property? Maybe a little bit. Okay, maybe a little bit to be on the water. But would I go bonkers? Would I pay 150,000 today? No. Okay, I would wait. And then that's where we get down through here. Shop, shop, shop. Don't fall in love. Don't move forward due to FOMO. What is FOMO? And I just learned this through the crypto world not too long ago. FOMO, fear of missing out. Okay, you love this house. Guys, it's, again, when in doubt, do without. Think it through. Wait a little bit of time and see, okay, do I still want it a day later, or 2 days later? In this market, you can't wait a week because you're going to miss out. I get it, but you should have already done this thinking prior to. I want a house, but don't fall in love with the home. There's always another house out there you're going to fall in love with. Okay, so keep those words of wisdom. Be prepared. Okay, work with a reputable mortgage company. Here's why I say that. You need an awesome realtor. You need a great attorney. You need, good insurance. But the whole piece stems around, can you get financing? Are the numbers which you're thinking they would be? Can you manage with the numbers? Okay. So what I talk about there, a lot of people don't understand. Okay. They run a mortgage calculator and it's like, I can afford that. But some mortgage calculators don't have your real estate taxes in there. Some might. But the house you're going to buy, is those real estate taxes exactly the numbers that reflect on the numbers that you already ran? So you got to work through these things. That's what drives me nuts when people are like, I want the cheapest rate in town. I just want to click through and get a mortgage. Guys, there's so much more to it. You need to be educated. What program? Do you need FHA? What's the pros and cons of FHA? Could it qualify for a USDA loan? No money down, no PMI. Do you qualify for a VA loan? Is it best for you? VA has a pretty substantial fees that you might not know about, okay? And so forth. So those are the things that I plead to people. Please work with, I hope you work with us. And I'm going to give you my information right at the end because we need to walk you through that. Any and all questions. I love doing these by Zoom. So I can go through the numbers with you guys right on my computer. We can run your credit. We can run your credit scores. We can run your loan through what we call Fannie Mae and Freddie Mac. Those are the two entities out there that do all mortgages in the country. Bet you didn't know that. I use Fannie Mae and Freddie Mac to get your loan approved. So does Chase. So does Wells Fargo. So does Rocket Mortgage. So does Guaranteed Rate. So does Quicken. We all use the same system. But again, it's computer data information. Is the data that you're putting in correct? Is it not correct? Then when it approves the loan, what kind of program are you going to go with? Do you want to go FHA, VA? Does your mortgage originator or your mortgage advisor know all these things? Are they explaining it to you and so forth? You got to know the numbers, guys, because too many people get into the house and just they can't afford it. Here's what happened. Here's the biggest thing that happened back in when the housing market crashed. Almost all those loans had teaser rates that were going to spike. If the people were educated enough, they would have seen that, okay, in a year or two, my mortgage payment could go up about 50%, maybe 100%. If you're building a home, your taxes, real estate taxes on that house are going to be minuscule. Do you know that they might go from, it might say you owe $1,000 or whatever, but when your house finally gets assessed, when it's done, said and done, your real estate taxes could potentially triple. Do you know that? These are the things that people don't shortcut yourself in regards to when you're looking for the mortgage. The mortgage part is the hardest piece of the puzzle. Once you know, okay, I now qualify and I'm comfortable with a $300,000 mortgage. Now we can help set you up with a realtor in your area that specializes in that area, that works with me and you to make sure you get into the house of your dream. We negotiate the best prices that there are. And then some of it's just going to fall apart. You're just not going to come to terms with the seller. It is what it is. But I'll be the first proponent to say, let's not way overpay for these things, because I know your finances and we can't afford that. So that's just one piece of the puzzle, and these are the ideas behind the scene that what I would do if I'm looking to buy a house. I would go through this checklist and just say, okay, am I ready? Can I afford it? What do the numbers look like? We can always find a house. There are hundreds and thousands of houses out there in where you want to live, but we got to make sure you're doing it the right way. So when in doubt, do without. So what I ask you to do is, I hope you find value in my videos. If you do, please give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. So how do you find out more about me and my team? Well, let's go there now. What I ask you to do is go to therateupdate.com, and it's going to show up like this. I've already chosen myself, so that's why this pops up. You can do a few different things. One, you can go through these. These are some questions that you can go through that helps us figure out what kind of mortgage program you would qualify for. Here's what I'd rather do. I'd rather you give us a call. Give us a call at 844-775-LOAN. It's 844-775-LOAN. Or hit the Apply Now button. What's going to happen there? We have a brand new system. It's basically similar to TurboTax. It's going to take you about 5 or 10 minutes. It will. But you're going to go through here and you're going to do all the things that you're going to do in this system are basically you're going to work on your own loan. Okay. You're putting the data in. You're pulling your credit. You can see what your credit scores are. Then what happens on my side, I get an alert that you put all your information in the system. Give me about an hour. I'm going to go into that system and I'm going to run your file through DU and LP. That is the Fannie Mae and Freddie Mac that I spoke of earlier. Fannie Mae and Freddie Mac are the two entities in the whole country that do basically 90% of the mortgages in the country right now. Okay. And again, all the lenders, we use it. So that's just the starting point. So what you're going to do is you're going to put in all your information. You're going to pull your credit, see your credit scores. And then from there, I'll take over. I'll go into the system, make any corrections or adjustments that's needed. I'll run your loan through Fannie and Freddie. And then I'll get back with you and say, okay, you're approved or you're not approved. Here's some things we got to work on. But you'll know where you're at during the whole entire process here, because you're going to get updates. You're going to get alerts. We can even sync in your realtor with this so they know what's going on. They can keep abreast on where the market's going in regards to you, not where the market's going, where your loan is going throughout this whole process. So you and them and me know exactly where your loan is during this entire process. But the process starts with you deciding you want to buy a house, making sure that you qualify, and that's by contacting us and doing this information. So once you do that, finish the application, give us about an hour to go into it, review it. We might even call you at that time to make any adjustments. Maybe you filled out something incorrectly or missed something that we need to know. But then we're going to go in, and within an hour, I'll get you approved, because you're going to pull your credit, you're going to upload any information in regards to your assets and your income. Everything's going to be there. So then once you're approved, think of it, you're approved. You didn't go through a site and just click, click, click and hope to God everything worked and you printed out your pre-approval letter. You go out there, you put an offer in on the property, you go back to the lender, and then all of a sudden you find out, oh, you know what? I forgot to put in that I paid child support. Now you don't qualify. Well, now your hopes and dreams are shattered. You got your realtor ticked off. You got an attorney ticked off. You got a seller that's now like, why didn't you qualify at the beginning? So all this stuff you can avoid by doing this today. So if you're looking to buy a house, please reach out to us. Or if you're just kind of kicking the tires, give us a call. We'd love to answer any and all questions that you got. So thanks so much for watching. God bless. We hope to hear from you. See you soon. Bye-bye.